Hey everybody, I'm back after a long holiday weekend. I hope everybody enjoyed your Memorial Day weekend if you had a chance to celebrate it, or if you do celebrate. I had a great time. All right, let's talk about the markets. Listen, first things first, got to talk about oil, where I correctly called the top at $72 based on a fundamental that nobody else saw except for myself. And of course, I informed all of my MMT Trader subscribers, and that was, and you know this too because I've been posting this up on videos now for several weeks, that was China's decision to curtail imports of oil from Saudi Arabia because, as China said, the price was too high. Nobody paid attention to this development, and this is a very, very significant concept that I think, well, not that I think, that I know the vast majority, if not all, of the Wall Street analytical community missed. I mean, you had Goldman Sachs talking about oil going to 100. You had UBS, you had Morgan Stanley, all of them talking about a big spike in oil. I was the only one who said that China decision, as the world's largest importer of oil, was basically an act of price setting. And you saw the reaction by the Saudis. They cut the price. Okay, so the price was going down, and there was a couple of days, maybe a week, that it was hovering around 72. We had a couple of rallies above 72 that failed, and now down in the 66 handle. And I still think that oil can go lower here. You have a very large speculative component in the oil market, which is net long the market, and that needs to be liquidated. Some of that has been happening over the last several weeks. We have seen liquidation in that speculative long, but that will continue. Anyway, that oil call, and don't forget, we rode oil all the way up from, what, $29, $30 a barrel over the last two and a half years, and now calling the top at 72 when everybody else got bullish at the top. All right, so you have that going on. You have a continued correction in the stock market. Hey, some interesting data coming out in the Commitment of Traders report with respect to stock index futures. I cover this in the MMT Trader issue this week, which will be out later today. If you are not a subscriber and you want to get that issue, go to my website, pitbulleconomics.com, and sign up for a 30-day free trial, no obligation, of MMT Trader. You will get that issue. In the meantime, you will be able to access all the back issues. But some very interesting developments in the Commitment of Traders report that the CFTC puts out with respect to positions in stock index futures that you need to know about. All right, now, I bet everybody's wondering what's going on with the dollar. Now, if you look at the current environment of the dollar, it is a narrow advance, mainly against European currencies. Also, I guess you could say some emerging market currencies, although it has stopped going up against the Mexican peso. But this rally in the dollar is really focused on the euro, which is being politically driven, or I should say the rally or the sell-off in the euro is being politically driven. This, folks, this is like the situation with Greece back in 2010. There was all sorts of political turmoil. There were constant reports or threats of Greece leaving the euro. There was the inability of Greece to form a government for a period of time. There was a rising populist movement within Greece, which ultimately got thwarted. Same thing going on in Italy. You have a rising populist movement. By the way, the Italian economy is growing. If you look at the euro area, okay, that is running large trade surpluses. You are under austerity. You are under ECB policies, which include 0% interest rates and asset purchases. All of these things are bullish for the currency. But you are having a zombie-driven, politically inspired, everybody's freaking out, everybody's panicking, they're going to ditch the euro. I doubt very much they're going to ditch the euro. And we have seen this before, so you are seeing that. And this sort of fear and concern and worry also spilling over into the British pound. The dollar is down against the Japanese yen. The dollar is not rallying against the Australian dollar. The dollar is not rallying against the New Zealand dollar, which is basically in the range it has been in now for 5 or 6 months. So, you really have to put these things into perspective. Yes, the dollar index has rallied up to the high of the previous correction high. Don't forget, folks, we went from 104 on the dollar index down to 88 and change, and now bouncing up to like 95. I've been short from 104 on the dollar index. And I've been selling this rally aggressively. I keep adding to my short position, and I'm telling you, this will be the greatest score of my lifetime. This is going to be the greatest score of my lifetime. So the rest of you mousy boys who are running around like it's a 6th grade birthday party, cheering about how you called this big dollar move. This is not a big dollar move, I hate to tell you. 5-6%. You're down 14%. You're up 6%. I mean, this is the way things trade, all right? And this, if we had not had this political turmoil, there would have been a correction. Don't get me wrong. The market was very, very short dollar, so you would get a correction, but it is being exacerbated right now by the political turmoil. There's also another factor in here. It's a factor I mentioned. Treasury has absorbed a lot of funds in April, had absorbed a lot of funds as a result of that's normal seasonal stuff, tax payments, and it's been very slow in disgorging those funds. I mean, it went up to $419 billion in the Treasury general account. We're down to $311 billion as of May 24th, but that's low. I mean, the average balance in the Treasury's account is about $160, $170 billion. So, still got quite a bit to go there. Another $140, $150 billion of spending out of those funds. So, and it could be that Mnuchin decides to hold higher balances in the Treasury general account because, that they view that as some kind of a positive, like having a big bank balance in dollars where the Treasury is the issuer. I mean, folks, these guys don't understand. But even if that is the case, even if he views higher balances in the Treasury general account as a positive, it does not reverse the overall negatives for the dollar. Those are still in place. The dollar is going down, and I'm going to make the biggest score of my lifetime. All right, folks, got to get back to work. I'll see everybody later. Bye-bye.